Bitcoin is beginning to show signs of exhaustion on the smaller time frame. Could this trigger a breakdown that eventually pushes Bitcoin under 30,000? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be focusing on the smaller time frame price action, discussing it from a technical and structural perspective, going over how the data is shaping up, the current weakness, and the next move. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, data, technical and structural levels, relevant economic data, and news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay on top of the market. If you're interested in joining our VIP channel, we post trading signals of exact entries, exact stop losses, exact targets, everything you need, exclusive analysis and justification. Not only that, you'll also get access to our group chats where all of our members are in here trading, learning, and developing their skills as traders as we are in here teaching you guys. If you're interested in joining our community, go to the free channel, click the pinned comments, scroll up, and you can find more information over here. We have a whole entire trading track record of over 29 months of trades that you can go ahead and view. 671 trades in total. We have a 79% win rate. That is an absolutely phenomenal result over here. Check it out. Let's go ahead and discuss Bitcoin. So for the month, we can see Bitcoin is sitting currently now in the negative. We're down 0.58%. Looking at our 24-hour volume, we're starting to see it slightly come back up. It is up 1.49%, still relatively low over the weekend now in America at 50 billion. We do expect that to come upwards in the next 24 hours. 24-hour liquidations are sitting down 6% at 45 million. Again, guys, weekend volume, we don't expect too much to occur. Looking at the liquidations, we can see a relatively even split between both longs and shorts. Again, really not too much price actions occurred. We have really just seen Bitcoin move sideways in this little chop zone, this rising channel formation with a couple of liquidation wicks to the top side, taking out these short positions, and a couple to the downside, taking out some of these over leveraged long positions. So what is happening, guys, with the DXY? Because the markets have opened up for the DXY, and the DXY is currently finding support. We do have a decent support over here for the DXY over the next week, and this is a level we do want to be keeping our eyes on, as it is a pretty significant level, right? We're sitting just under 100, but we're sitting around 100, so this level is still kind of finding a decent amount of support. As we can see, if we go back in time over here, we had a large area of resistance, followed by a support resistance flip over here back in April 2022. That is that same level we are retesting. If we go forward and look at the economic data, we do have a very important bit of economic data coming up, which is going to be this over here. This, of course, is the Federal Reserve rate hike for the 26th of July. This is American time. We can see that the probabilities are 93% in favor of a hike, 7% in favor of no change, which is a pause, and 0% in favor of an ease. These numbers can change me up to date, but of course are very, very relevant in predicting the overall risk in the market moving into the rate hike, and of course the overall expected change of risk after the rate hike has occurred. And as you know, rising interest rates is generally bearish for cryptocurrency and the stock market, as it represents the cost of debt is rising. The cost of debt does rise. Companies, individuals are less likely to spend their available cash flow on investing or acquiring these assets, and they're more likely to keep it in cash. And we do generally then see the DXY rise as a result. So we do see the rate hike occur. We're more likely to see the DXY move back upwards as opposed to downwards. If the rate hike doesn't occur and we see a pause, we can expect this level to be lost and the prices of the DXY to fall, and thus the markets to rally. Looking at the S&P 500, we are still in this same level of resistance. I'm going to go ahead and delete some of this stuff over here. We can see a perfect retest of this uptrending resistance once more. And again, not really expecting too much decision in these markets right now. We're more or less watching, waiting, viewing, and seeing what occurs. This level is going to be a resistance, and as you know, resistance is resistance until it is not, and therefore, if you're looking at taking positions, if anything, you should be hedging slightly more into the short positions now with very, very tight stop losses. Happy to swing over into the longs after. If you've been following our channel, you would know that we said if we got a weekly close above this level, we're very likely to push up to 45k. We have now seen that move, and now we're saying we're at resistance at these points. We expect pullbacks to occur as we retest these levels of resistance. The DXY does move upwards. If we do see a rate hike, it is more than likely we move down, and it's not confirmed. Nothing in trading is certain, but it is more than likely. The probabilities lay in favor of a rejection. Moving on, guys, let's go ahead and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And as I said, I want to keep today's video short, snappy, and sharp because there's a lot to talk about. At the same time, we kind of went over everything yesterday. In today's video, I want to talk about only the new developments, the immediate news. But before we do that, we need to give you a really quick overview of what the key levels are, why they are relevant, so we can understand the impact of our short-term analysis when we do get into it. So, really quickly, just to reiterate everything for the new viewers, we are in a horizontal channel. This is a massive, massive chop zone that has been basically going on now for 30 or so days. And we do expect a big move to come from this. And I've been saying this for a while. These consolidations are like pressure cookers, if I have to give an analogy. The longer they're on, the longer they build up the pressure, the larger the move. This is liquidity. This is range building. This is consolidation and compression of price action. When we break these liquidity levels to a downside or upside, we do expect violent reactions in that direction, provided they were not deviations. So we do expect a big move to come from this still, and that is still very relevant. The longer this goes on, we do expect a larger and more aggressive that move to be. Larger meaning percentage return, more aggressive means the overall speed and velocity of that move. It's going to be one or the other. So this is an incredibly important range. If we go ahead and take a look at the key levels in this range, we can see we have our annotations over here. We have macro bullish above 32,000. Our 32,000 to 31.3 thousand is a major area of resistance. You can see we've actually gone ahead and said that level was resistance. Below 31,000 to 29.8, we have a neutral territory. The reason we are neutral is because we are on a sideways chop zone. The direction is uncertain and unclear, right? These are neutral consolidations, meaning it is likely to go either direction. We have almost equal probability in each direction when we look at these horizontal ranges. When we look at the short-term bearish range, we are looking for the price to drop below 29.8. If we drop below 29.8, we expect us to go into a short-term bearish trend. That will confirm the breakdown of this structural range, and the price will deviate under toward our next support, or at least close to that next support. That next support is sitting at 28.4K. Underneath 28.4K, we enter a daily bearish trend, which develops strength. So from a weak daily bearish trend to a strong daily bearish trend, the lower it moves down. If we're looking at our horizontal range, the specific range we are sitting in, the key levels of support are sitting between 30,000, which is this upper range of this box, to the lower range of the box, which is 29.8. We can see numerous retests, bounces, levels of support, and liquidity in this level. This area here is a level of massive massive support, okay? Huge level of support. On the top side, we can see the level between 31,000 and 31.3, providing that relative level of resistance. This on the top side has provided massive levels of rejection and resistance through the history of Bitcoin. A key level of resistance we are looking for rejections, and if the price breaks above, will be a continuation point for Bitcoin's price action. Moving on to the smaller time frame, guys, let's discuss exactly what is going on. So if we look at the smaller time frame, we have what we would call a rising channel formation. The rising channel formation is structurally a bearish pattern. This is a pattern where we have two parallel trend lines, both on a slight direction upwards, and we have the price moving between. Similar to what we saw on the horizontal channel, the difference is a rising channel has the price moving slightly upwards. A horizontal channel is two horizontal trend lines. This is an exhaustion pattern. On the smaller time frame, we are seeing the price from a structural perspective slightly exhaust. If we look at it from a technical perspective, we can see the RSI at the bottom, we can see the open interest in the middle, and we can see the CVD at the top. This is our cumulative volume delta. This suggests our overall volume from a vertical level, from one candle to another candle, what the total volume is doing. Our open interest is kind of a representation of money flow. So how the bulls and the bears are going, where is the direction going in terms of buying volume, selling volume from bulls and bears. And obviously the RSI is representation of overall momentum, momentum being equal to volatility and speed. So velocity and speed equal momentum, right? So the speed, the velocity, the volume going, all that kind of stuff equals our momentum. So some relevant indicators we're going to be taking a look at in a second. But before we do, let's talk about the structural level. What we do need to make sure of, number one, we are very close to our major support. 30,000 to 29.8 is a huge level of support. If we look at the drawdown ratio from here, we are relatively close. So if we're looking for a high time frame swing, if we're looking at it from a risk return perspective, knowing this range is neutral, we have more upside profit than we do downside risk. And therefore, if you're looking for high time frame swings, you should be focusing a little bit more on the long perspective. If you're looking at scalp trading, short-term scalp trades, you should be focused more on the shorting perspective, because we'll be discussing this in a second. If we take a look at the measured move of the rising channel, which is going to be the low point, okay, point A to point B, which is the high point, and we apply that to a perceived breakdown, we can see the breakdown would actually take us under 30,000. The moment we drop under 30,000, we are exposed to the risk of increased volatility and a potential liquidity grab underneath 29, right? If we are looking for a breakdown under 29 and the breakdown under 29 would cause a move lower, then the loss of 30,000 exposes us to the risk of a move toward 29, like we have seen here, like we have seen here, like we have seen here. So a breakdown of this rising channel would expose the short-term price action to a risk of potentially developing a downtrend that would result in a break of the higher time frame support at 29.8k and ultimately push the price lower. This is incredibly bad. This is very dangerous and something we need to be paying attention to. Again, you shouldn't be a bull, you shouldn't be a bear. What happens shouldn't matter to you beyond the point of which how can you capitalize on the next move. So let's go ahead, guys, and talk about what the short term is actually suggesting from a technical perspective, then zoom out a little bit and discuss possible scenarios in which the bulls can reclaim control. Because right now, again, from a short-term perspective, we are more bearish. This is a more bearish structure, but we do have to identify one thing. Number one, this is an uptrending structure until it breaks. So until this level breaks, we don't expect the price to move downwards. Okay, make that very clear. Until that occurs, the bulls can invalidate this bearish structure and push the price up. However, that is less likely. So really quickly, one scenario that the bulls could do is they could push the price up to deviate above this rising channel structure to retest this uptrending resistance once more before we see a rejection and back down. That would be a very smart move for the market makers to do, a very good move to liquidate early shorts on Bitcoin and to push the price further back down. If the bulls want to reclaim control and push the price back upwards into this range, you would need to see 30,500-ish, this uptrending resistance, be cleared. We need to see the price reclaim this uptrending resistance to push the price back into this range, and thus another video will discuss if that occurs. So looking at the short term, those should be your biases. Let's go ahead and delve into the technical indicators on the smaller time frame, discuss how these indicators are shaping up. So if we take a look at our CVD over here, we can see we can draw in our horizontal resistances over here. We can see we have our horizontal resistance is going to be a local high point. For the bulls to take control, we do need to be breaking through this local high level of resistance on the CVD. If the CVD can push past this level of resistance at 1.655k, we could expect some bullish momentum and volume to push into market and to push the prices up. The same goes for the open interest over here. We do need to start breaking above these high points over here that we set on these local highs. Remember, this local high point is representing this level of resistance, okay? We do need to start breaking above that to flip the strength in favor of the bulls. When we have falling open interest and falling price action, this is a sign of weakness. It is bearish, okay? It is not a very good thing to see, okay? If we're looking at the momentum over here, guys, we can see the momentum is showing, it's showing an attempt to push upwards, but overall, if we do zoom out to a higher time frame, we can see, if we zoom out, you know, we're looking at hourly, we're looking at a 4-hour, we can see overall the momentum has come down. It is negative. It is trying to find a base support around this level, and it will look to find a base of support provided we can remain above this uptrending support level. So the momentum isn't necessarily negative yet, but it is by no means anything of suggesting strength. It is in this neutral range. If we're looking at the RSI over here, if we do lose this uptrending support level on the RSI, this would be indicative of a negative momentum shift. If that does occur, that would expose us to massive risk of losing $30,000, as the RSI breakdown would only occur after the price loses this trend line in this particular context, okay? In this particular context. So if we're looking for the next move for Bitcoin, what I'd be looking for is this. I'll give you two scenarios that I'm personally trading and looking for the next move. Number one is a breakdown of this level. I would be looking to short considering the momentum, if the momentum does flip negative. Number two, I'll be looking for retests and rejections between this range over here. Okay, we've got this little pocket, this little rejection pocket, this is what I'm going to call it, a rejection pocket, between this upper resistance of the rising channel formation and uptrending support level of the prior uptrending pattern. This is going to be our rejection pocket, our area of liquidity. This is the area of liquidity. This is where we're looking for potential rejections to develop from before moves toward the downside. If this level is broken above, okay, we flip that level of liquidity, it then turns to support. We expect the prices to move upwards. I think I'm going to leave the video there, guys. Again, not really much happening. The weekend price action is so boring, particularly in the last 2 days. It's been probably the most boring weekend price action I've witnessed for a while. The volume's down, trading's down, not much opportunity, but in these times, it's good to look forward, look at things you can do, look at things you're looking for, plan your higher time frame plan, right? We've been talking about this range now for weeks, okay? For weeks, we're probably getting so sick of it, but the reality is the charts are the charts. We don't choose these things. Sometimes trading isn't fun. Sometimes the market isn't entertaining. Sometimes boring things occur, but take it as a win because sometimes it gives you a chance to prepare. It gives you a chance to zoom out and go over the same things over and over. Solidify your plan, tweak your plan, adjust your plan. So when it does actually occur, you're not sitting there, you know, waiting around, acting like what the hell's happening. You're prepared for the move and you can execute the move, okay? Not everything in trading is going up, it's going down. Sometimes we get horizontal consolidations, sometimes we get indecision, and it's more important to zoom out and look at the points of which the indecision flips in probabilities. We're looking at where will the price need to go for the probabilities to then shift in favor of a particular direction, and that is when we're starting to put our entries in for that direction to occur, okay? Thanks for watching. Catch you guys in the next one. Have a great day.